Hello, this is Ernest Burley Jr. coming to you again with some more great information. I am your certified financial planner professional. I am your chartered financial consultant. I'm your NFLPA registered player financial advisor. I'm your investment advisor representative. I hold the Series 6, 63, and 7. I'm also your author of 2 books on money management. Money Management Easy as 1, 2, 3, and Money Management from Grade School to Grad School. And I'm also your licensed insurance agent with over 30 years experience in the industry and being in business over 25 years. I have clients all across the country, from the north to the south to the east to the west, all across the country. So state lines don't restrict Burley Insurance and Financial Services from helping people either in the insurance arena or in the financial services arena. So my specialties are wealth management, investing, whether it be IRAs or 401k plans, simple IRAs, investment portfolios, what have you, asset protection, so protecting what you've accumulated. Also asset growth, because you want to grow your assets, of course, over time in a strategic and wise way. Financial planning, whether it be basic financial planning or comprehensive financial planning. Also insurance, all different types of insurance, whether it be life insurance, long-term care, disability, auto, home, business, church, boat, what have you, renters, condo, all of that. And also athlete management as an NFLPA registered player financial advisor. Yes, so there you go. So the purpose of this podcast is to educate you, to enlighten you, to empower you with clear, objective, unbiased information to help you make the right decisions on some good decisions for you, for your family, for your business, for your church, for whomever, right? So this is, I don't have a dog in the hunt here. Of course, I would love to be your financial advisor, your investment advisor representative, your insurance guy, whomever. But I just want you to have clear, objective information so you can do the research and make sure you don't get God out there, because there's a lot of bad information out there. So I just like to provide good information to my listening audience. Okay, so today's podcast is titled 3 Safe Ways or 3 Key Ways to Protect Your Assets. 3 key ways to protect your assets. So it's a very common and wise goal to want to grow your assets, right? That makes total sense. Compound interest over time will be your best friend in that endeavor, right? Proper diversification is also very, very important. So yes, people are very concerned with growing their money over time or growing their assets over time. It is also a common theme for people to want to protect their assets that they've accumulated at some point in time. So at some point in time, people are thinking, okay, I need to get in protection mode right now. So each person has their own level of risk, like their own risk tolerance as to how much the risk they want to continue to expose their assets to. Now, when people get like later in years, and that's all relative. Some people later in years is 50, 60 years old. Some people 40, 50 years old. Everyone's different. But the older people get, the more people tend to lean towards being more safe or conservative with their investments and with their assets, as opposed to being more growth oriented and more aggressive with their assets. And you know, different strokes for different folks, like I said before. Now, people normally fall in the middle. I've noticed people normally fall in the middle of the spectrum. So you have conservative and you have aggressive, then you have in the middle. People normally kind of meet in the middle, moderate. Like it's so people still want some growth potential in their assets, but they also want some safety. So they kind of meet in the middle. And they want like that kind of safety and growth component within their portfolio as they get in their later years. Okay. So people start thinking about and talking about more, hey, what are some key ways or some conservative ways for me to protect my assets? And here are 3 key ways for you to help protect your assets. Okay. So here's number 1. The first way is cash. Cash. Your cash is FDIC insured. FDIC means Federal Deposit Insurance Corporation. So Federal Deposit Insurance Corporation. So it's backed by the full strength of the federal government. Up to $250,000 per any one person per single account, and up to $500,000 for a joint account per bank. So if you have $1 million in cash and you're single, you can go to 4 banks and get that $1 million FDIC insured. If you have it all in one bank, it's only insured up to $250,000, right? If you're married and have a joint account, well, let's not say married. If you have a joint account, it's insured up to $500,000, right? So you can insure your cash, right? Now, your cash is your safety net, it's your security blanket, it's there for emergencies. I also recommend clients use cash if some clients are systematically drawing down their investments to supplement their living, whether they're retired or have some clients where someone passed and left them a large sum of money. I'm managing that for them. So some people normally let that grow. Most people let it grow and don't touch it, but some people are systematically taking money out of that to kind of smooth out their current living situation. Some people are retired and they're taking money out of their investment plans to supplement their retirement. But when the market is volatile or down, I recommend people start using their cash instead of selling out of their investment portfolios when the investments are low, right? You don't want to sell low. Ideally, you want to sell high. So if you have that cash available, you can protect your assets from having to sell them at a low point and use the cash in the meantime. And when your investments come back up, then you can shore back up that cash at that point. Or if you have other income, a lot of people have, like, some people have a pension, some people have Social Security or other income that's coming in to help shore up that cash that was taken during the down season in your investment portfolio. So cash just gives you flexibility and options. It's FDIC insured, it's guaranteed to be there. So that's one key way or safe way to protect your assets, having enough cash on hand, okay? Second way to protect your assets, insurance, okay? So insurance, you have all different types of insurance plans, right? So insurance is your pal. I've said that before. I have that in this book. It's your pal. It protects your assets and lifestyle. PAL, protects assets and lifestyle. So you have disability income insurance, long-term care insurance. Please check out my podcast on those different plans. I have a podcast on each different type of insurance and how those plans are beneficial and advantageous to you. So disability income insurance protects your income earning ability. If you're injured or sick and you can't work, the bills don't just go away, right? You still have to pay those bills. So you receive a check every month from your disability income insurance policy to help you maintain your standard of living and pay your bills, right? So that protects your assets. So your house doesn't go into foreclosure. So your car doesn't get repossessed, right? You can still make your payments, pay your bills. Long-term care insurance, that's a very huge bill. So if a person needs those type of services, please look at my podcast on long-term care coverage. Basically, if you can't perform 2 of 6 ADLs, activities of daily living, that policy will kick in and pay a monthly benefit for you. So activities of daily living are considered things like feeding yourself, bathing yourself, transferring from place to place, continence issues, stuff like that. Or if you have one cognitive impairment like dementia or Alzheimer, that plan kicks right in and starts paying a monthly benefit. So long-term care coverage, I mean, those services, they range around $6,000 or $7,000 per month. That will eat up your assets really fast, right? A lot of people, man, that will eat up your assets very quickly. So long-term care insurance protects your assets from that happening. Health insurance, also like auto insurance, life insurance. Life insurance can be while you're living or after you pass. So some policies have a living benefit, so you could take advantage of the life insurance policy, a living benefit, basically a cash value in there that you can take advantage of while you're living. And then some policies do not. So it's advantageous to your beneficiaries after you pass, so they don't have to sell the house or be in some financial hardship. That policy will kick in and they'll be able to use the cash to maintain their standard of living. Versus the policy with the living benefit or cash value, you can use that policy to benefit yourself while you're still living. And then when you pass, it still will pay out a benefit to your beneficiary. So life insurance protects your assets also. Auto insurance, homeowners insurance, business insurance, contractors insurance, church policies, all those policies protect your assets too, right? So you have two main focal points on those policies. You have property damage, right? So like, say for instance, here I have my property, right? Desks, I have computers, I have phones, I have all this business property. So it protects that business property against, well, it doesn't protect it against something happening, but if something does happen, I can go to the insurance company and get reimbursed for it. So theft, fire, vandalism, what have you, right? And then you have liability arising out of owning property. So if you own a vehicle, you own a house, you own an investment property, you own a boat, Whenever you own property, you have liability that can arise out of ownership of that property or ownership of that business. So you want to make sure those two areas are covered because that protects your assets too, right? To have your auto insurance, your homeowner's insurance, your investment property insured, that's protecting those assets for property damage and liability arising out of those pieces of property. So that's another key way to protect your assets, having adequate insurance on hand. Okay, so let's review that real quick. The insurance that is involved with your body, yourself, is protecting you, protecting your income earning ability, and also protecting you from high healthcare costs. Because if you have health insurance, then the health insurance is going to pay the brunt of those expenses for a routine visit or surgery or what have you. Health insurance pays for that versus like the disability income insurance and the long-term care insurance, those pay for different types of things. So anything that's protecting your income earning ability or healthcare costs, that's one type of insurance plan or different types of insurance plan. Then you have property insurance that insures property, right? The actual property itself, the building, the structure, the contents, things of that nature, and liability out of owning that property. So very important insurance to have the adequate amount of insurance and the proper type of insurance to protect your assets. Now, third key way to protect your assets is fixed annuities. Okay, the most common fixed annuity out there now is called an equity indexed annuity. So those plans, they pretty much preserve your principal. So the value of your annuity only goes up, never goes down, because it's not attached to the stock market, right? So those companies and these guarantees are basically the financial strength of the company that's backing them, right? So basically life insurance companies underwrite annuities. So you want to make sure the company is financially stable, financially strong, has a good reputation, been around for a good period of time before you get involved with an annuity. So that's a good way or key way to protect your assets also, because the amount you deposit into those annuities is pretty much guaranteed to be there based on the financial strength of that insurance company, right? So it will only go up in value. It's going to be slow growth. So that's a disadvantage to annuities. The growth is slow, but like I said before, people tend to shy away more from being growth oriented to being more conservative as they get, later in years, and they want to protect it. So that's protecting that particular asset. You dump $1 million into the annuity, hey, that thing is only going to pretty much go up in value. It's not going to go down in value. Doesn't matter what's going on with the stock market. It could be as volatile as whatever it wants to be. That annuity product is preserving what you have in there and giving you a pretty slow growth rate over time. So very important to know that about the annuities. But like I said, slow growth, and also it's going to limit your access to that money. So you have to realize that too. You have to limit it. And please check out my podcast on that information, right? Because those annuities have a window that's basically called a surrender period, where you can only access up to 10% of that money without being penalized if you go beyond the 10%. But once you get outside that window, then you can take all of it, take as much as you want. But it's a very key, safe way to protect your assets. And that's it. Those are the three key ways to protect your assets: cash, FDIC insured by the federal government, right? Then you have insurance, and the insurance policies, like we just talked about, the various insurance policies, those are backed by the financial strength of an insurance company. And then you have the annuities, which the most popular ones out there, I think nowadays, are equity indexed annuities, because they just protect that principal that you put in, and they give you a slow growth rate over time, so you don't have to worry about having this volatility in the market or losing money in the market. So those are your three key ways to safely protect your assets, okay? And that's it for today's podcast. Hey, I just want to thank you guys for listening in. I want to recap it real quick. So the recap is there are some key ways to protect your assets. And we just went over those. So I don't want to go over them again, but I'm just going to say them real quick: cash, insurance, annuities, fixed annuities. Okay, so, and I want to say fixed annuities, right? The annuities that are not attached to the stock market, right? So those are the ones, because there are also annuities out there called variable. So there are annuities, variable annuities, there are fixed annuities, there are investment accounts. You can do all those type things, but I'm saying fixed annuities or equity indexed annuities are the ones that you want to focus on as far as a key way to be conservative and safe with your money. Okay. Takeaways. It's all based on, now the first two are no brainers for the most part. The cash, you can understand how that's a safe measure to protect your assets. The insurance, that's a no brainer too. I know some people don't like insurance, but I'm sure you understand what I was saying as to how that protects your assets, protects your property, protects your body, as far as your income earning ability and healthcare costs, and also protects you from liability arising out of that property or those properties. Insurance. Now, annuities, another one. But all of these are based on your financial situation. So you do what fits your situation. Not everything is for everybody. So that's why you need to go to someone who's independent, someone who's credentialed, someone who's experienced, that can take a look at your total financial picture and see what fits for you. Okay. But those are three key ways to protect your assets. Thank you guys for listening. I really appreciate that, that you do this every week and listen in. Ask that you forward this podcast to others and ask them to forward it to others, and so on and so on. Please forward it to your friends, forward it to your family, your coworkers, your church members, people all across the country, all across the world. The internet is all over the place, right? So I ask that you forward this information to them and ask them to go on to my YouTube channel and subscribe. I have a ton of podcasts on there that address various topics. Like I said, anywhere from being a business owner to real estate, to insurance, to financial planning, wealth management, investing, things of that nature. So a lot of different topics on my YouTube channel, podcast, and also 1-minute snippets that talk about various things also. So please go on to the channel, subscribe, ask your friends, your family, your church members, everyone else to subscribe, so we can get those subscriptions up and get the viewership up, because I think it's really good key information that will help you out. It's very clear, very objective information, okay? If you want to connect with me, very easy to do. It's just my first name at myfullname.com. So Ernest at ernestburleyjr.com. That's ERNEST at ERNESTBURLEYJR.com. Or you can call my firm, 301-262-2600. Again, that's 301-262-2600. All right. Now, since I talked about investing and all this other kind of great stuff and my credentials as a financial planner and chartered financial consultant and all that kind of stuff, I do have to read off a disclaimer to you. So here we go. Burley Insurance and Financial Services, Inc., 13621 Annapolis Road in Bowie, Maryland, 20720. That's where my firm is located. Securities and investment advisory services offered through Next Financial Group, Inc., member FINRA and SIPC. Burley Insurance and Financial Services, Inc. is not an affiliate of Next Financial Group, Inc. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Past performance does not guarantee future performance. All the views expressed are those of Ernest Burley Jr., myself, and Burley Insurance and Financial Services, Inc., and not those of Next Financial Group, Inc. Next Financial Group, Inc. does not provide tax advice. Okay, so that's it for my disclaimer. And that's it for this podcast. I hope y'all got some good information from it. Hope you share it with others, and hope it helps you out, most definitely. Okay. So until next time, this is your chartered financial consultant, your certified financial planner, your NFLPA registered player financial advisor, your author of 2 books on money management. Signing off until next time. Okay, y'all take care and y'all be safe out there. Ernest Burley signing off until we speak again. Y'all be safe.